In American society, money is a taboo topic. We're taught at a young age it's improper to talk about it, but we're also bombarded with messages about the power and importance of money in our everyday lives. And by not talking about it, we miss out on the skills and lessons we need to effectively understand and financially plan. That changes today. Welcome to Money Tales. Hosted by Sandy Brager and Cami Doder, Money Tales brings more than 35 years of combined professional experience in personal finance to demystify money and demonstrate what it's like to speak openly about personal financial matters. Join us each episode as they interview modern-day movers and shakers about how money decisions intertwine with their daily lives in order to give you better insight into productive financial conversations. Subscribe today and register for our blog Fathom at aspiriant.com/podcasts to increase your money mojo. And now, here's Cami and Sandy.
Picture this. On a Friday night, you're 22 years old, standing in front of 8 million viewers on Shark Tank, shaking hands with Mark Cuban after closing a deal for your startup. The next morning, you're back in the Chicago Bulls locker room, folding towels and doing laundry like nothing happened. This is the extraordinary double life that our guest Mike Shannon lived while building his first company. By day, he was pitching investors and building a startup. By night, he was mopping floors during Bulls games and running errands for NBA superstars. It's a story that perfectly captures the wild contradictions of entrepreneurship, where dreams and reality collide in the most unexpected ways. Today, Mike is the CEO and co-founder of Impruve, an AI-native operating system built for financial advisors. Before launching Impruve, Mike co-founded Packback, an AI-powered education platform used by millions of students. The company was recognized by Time magazine as a top EdTech company and by Fast Company as one of the 10 most innovative companies. Over 12 years, Mike scaled the business from a scrappy startup to a $50 million plus acquisition. Mike captured the highs and lows of startup life in his book, Sweaty Equity, a ball boy, a billionaire, and the bonkers startup tale you've never heard.
Here are 3 key money topics Mike hits on in this conversation. First, be precise about financial terminology. And if you're an entrepreneur, remember that startup equity is about shared ownership and risk, not personal obligation. Second, when money conversations get difficult or uncertain, focus on the non-monetary assets you're building. Whether it's expertise, network, or resilience, these compound interest elements have real value that can pay dividends long before any financial exit. And third, financial pressure can kill good decision-making. By maintaining income during the early discovery phase of a business or any major financial venture, you preserve the flexibility to make smart, patient decisions rather than desperate ones. Now it's our pleasure to bring you Mike Shannon's Money Tales.
Welcome to the Money Tales podcast. I'm Cami Doder.
And I'm Sandy Brager.
The other morning, I'm reminded how money conversations can take place anytime, anywhere, with anyone, people you don't even know.
Were you talking with the crossing guard again?
Almost, but this one's even better. I had about 30 minutes before the family was waking up for the day, and I thought, I'll just go for a quick walk, fresh air and all that good energy that comes. So I'm powering, I know what I can do in that period of time. And there's this lady that walks out of her house very soon in the start of my walk. I don't know her. She's going to go get her trash cans. And I think, I should help. Then I get closer and I realize she doesn't need my help. So I say, hey, good morning. And we start chatting. The weather's so great. And her house has got a beautiful view. So I'm complimenting her. She says, I've owned it for 53 years. Good for you.
A long time.
That's a long time. What a great investment. So then we just start talking. How this relates to a money conversation is this is in 10, maybe 12 minutes. She's telling about her family and what happened in her life. And she became a real estate broker and blah, 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 blah. The financial advice she got. I didn't prompt any of this. I loved it, though. My favorite part is she says, my granddaughters are coming into town this weekend. They're in their late 20s, early 30s. They're coming in so that this amazing woman, who, by the way, is 88 years old, she looked fabulous. Even in a robe, she looked fabulous. she wants to have a conversation with them about her trusts.
Oh, very cool.
Incredible, Sandy. She doesn't want them surprised. And she also, this is what blew my mind, she doesn't want either one disappointed with anything that she has set up because now she can make changes versus if they just inherit whatever or have conversations with her about her trust and what all of her assets or her even emotional assets.
So she's going for full transparency and opening up those multi-generational asset shifting conversations. And you got there in less than 15 minutes.
In less than 15 minutes with someone I didn't know. Amazing. And as I left, I did look at my watch and said, oh, I got to go, got to get the kids ready for school. So I had to run off, which I would have loved to have had more time with her. But I did say what an incredible gift she was giving in this conversation.
Those are some of the best money conversations. Help people in your family that you care about understand what to expect, what not to expect, and what expectations you might have of them.
Oh, that's so wonderful, Sandy. If I see her again, I'm going to have more of that conversation. Well, it's my pleasure to turn our conversation to our guest today. Welcome, Mike Shannon, to the Money Tales podcast.
Hey, Cammie and Sandy. Thanks for having me. I'm a huge fan of the show.
Thank you. Well, we're excited to dive in. And would you start us off with an introduction and share a couple pivotal moments that have taken place in your life, really impacting who you are today?
Thanks again for having me. So, Mike Shannon, I'm an entrepreneur and writer here in Chicago. My story at present, I'm a dad of 2 young boys, husband, coaching Little League. That's my life today.
Oh, fun.
I'm in that mode now, working on another startup. My background, in a nutshell, I started a company in college that evolved a few times. We started off wanting to disrupt the high price of textbooks and evolved into an early AI-enhanced writing practice platform. It was called Packback. Now, the interesting intersection of that story, which my upcoming book tells kind of a comedy tale about, is in the first 3 years of starting that company as a college student, I was living a double life, working a little-known job called a ball boy for the Chicago Bulls. I would, by day, be pitching startup investments. By night, I'd be doing laundry in either the visiting team or the Chicago Bulls locker room, mopping the floor during games, packing the bus afterwards. Where those worlds collided, and what I've written a book about called Sweaty Equity, is on a Friday night, one of my co-founders and I, Casey, lucked out. We were 22, 23 years old, and we got on Shark Tank. On a Friday night, that aired in front of 8 million viewers. We did a deal with Mark Cuban. The next day, I was back in the Chicago Bulls locker room, folding towels and doing laundry. And a whole big story erupted from that. Things went really well, and then things fell down. The first business model didn't work. We had to go through some tough things. Money tales at a variety of levels, shareholders, investors, and stuff. So that's a little bit of my story. I've got 4 siblings. I'm second oldest. I was a kid who wanted to play basketball for the rest of my life and then got cut from my freshman year of high school B team. That opened the door to then, well, go be the mop boy for a team. And a lot of going after goals and seeing where the obstacles hit and then having to turn left, turn right, pivot, evolve. That's been the tale for me throughout my whole life and career. And I think that's perfect for writing because it creates great stories. And it's perfect for entrepreneurship because it's a game of iterating and evolving.
That's a good summary. And we're going to dive into your business because it isn't always up and to the right. We'll get there. But before we do, when you were young, when did money start having meaning to you? What was happening in your life?
I can remember the first job I ever had. I was 11 years old, and my neighbor, Mark, across the street had some landscaping that he was doing himself, and he was getting ready for a 4th of July party. He said, "Hey, I'll pay you $11 an hour." I couldn't believe he was going to pay me that much. "You got to be here at 6 a.m. and we're laying mulch and we're doing this or that." I jumped at it. And I remember when after one day of work, I had cash in my hand. It was like the most amazing thing because 5 kids in a household. My dad's a Southside Chicago, heavy grit. He was a volunteer fireman and a D-base programmer as I was growing up. And we were doing this labor no matter what. The household labor was happening.
You just weren't paid for it when you were in the home?
Yeah, it was like, wow, okay, there's a lever here. And I was never the best student. I was trying to talk my way through the bad report cards that mom and dad had to sign. All of a sudden, work and trading labor for dollars was something that I could control. And so I just became kind of everybody in the neighborhood's labor kid, and jobs kept going from there.
We have to know the type of person you are. What'd you do with that cash?
Nothing. I would hold on to it.
You're not a spender.
What I had was this hoarding mentality, like, well, I had to shovel all that stuff. And I was just holding on to it. I was a typical kid. I might want to buy some Pokemon cards or something, or a pair of basketball shoes. But mainly, I just really liked being able to see the pile of dollars get a little bigger, a little bigger, a little bigger. I remember just holding it around with me, telling my sibling, I've got $100.
So you're feeling good. You got the money bug early. You go off to college and you decide to start a business. Tell us about that.
Starting a business was always a dream of mine. My dad and my mom are both versions of entrepreneurs. They wouldn't tell you I'm an entrepreneur, but my dad was always a contractor. So he would do database programming, and he would find a church that needs help with their books. And then that grew into more corporations, but he was never like 401k benefits W-2 employee. There was always this question of when the next contract is coming. That's an entrepreneur. He just would call himself a contractor. And then my mom, she's an artist. She would have different businesses of her own, whether it was selling art at a gallery. She's a painter mainly. She had a Reiki healing practice. She would have clients coming in. I was always seeing this, you have to go build something to then earn the income. But then I also saw the pressure that came with lack of the 401k or the usual benefits. And so I remember being 19, 20, 21 and wanting to really understand, how do you build a foundation that then becomes this self-fulfilling thing, which in startup world, we would call recurring revenue. You would call compounding interest in wealth management. So when I was 19, I was playing club rugby, which I shouldn't have been doing. I should have been playing basketball at the rec. But I had an ankle injury and I was out. I missed half a Bulls season as a ball boy. I was out of rugby and I went on winter break. I was also a pizza delivery kid, which I wasn't very good at with a cast on my leg. I wasn't good at, period. But I remember thinking, okay, I'm either going to be watching movies or I'm going to be reading books. And I went to Borders bookstore at the time. I wanted to read about successful business people. And that's where I found Snowball was one of them, Warren Buffett, 800-page book. There were a few other entrepreneur books that I read, Sam Walton's. I got really hooked on reading stories about entrepreneurs. And the Warren Buffett story then got me into reading Intelligent Investor by Ben Graham. And I went deep down all these finance books. That's how I kind of overlap of coming back to this finance tech, wealth tech space. But that was kind of my origin story as an entrepreneur, of seeing that you could build a machine that then starts driving on its own at some point, rather than simply trading labor for dollar, labor for dollar.
I love that you just shared this story about learning from others. We've talked to other podcast guests that talk about surrounding yourself with the smartest people, and you don't have to know them. You can read their books. It's incredible. And the Bulls, you were exposed to people who were being paid a lot of money. I'm curious if that came across, and in what way did it?
That's an interesting question. I've never been asked that. People would ask me, who's a nice guy, who's a jerk, who's this or that. There's this shadow enterprise that at the time the ball boys ran, which would be favors for players before the game. You're either in the locker room or out on the court during warmups. And I'm talking 3 hours before the game. So there's like nobody at the stadium. So if you were in the locker room, you stood in the corner and you waited until somebody asked you for a favor. So long as we were done with the Gatorades and the luggage and stuff. Guy hands you a $20 bill and you go buy a $7 sandwich, and they almost automatically kept the change. And I had similar jobs. I was a caddy on a golf course before, and it was similar. I'd feel bad. You don't have to pay me $13 for this task that took me 3 minutes to run. I feel like, the hourly rate's too high. So I don't know if that shaped the view on money, but I'll tell you one fun story because you asked, and this is a footnote in the book. The players, they're taking care of people around them, and they're so high profile that there's always an eye on the player. They have family and friends that come to the games, and they're supporting a cousin. They need to pass some cash around or something. There was a moment we had at the time the MVP, Derrick Rose. And Derrick had gotten hurt, and so he was rehabbing. And I remember there was a moment where he needed some cash from the ATM. I think he had some family coming. It was at halftime. I was pulling in the warm-up gear for the players before they got into the locker room. And he said, hey, can you do me a favor? Oh, sure, of course. He was alone in the locker room because he had been doing a different rehab workout. He said, can you run to the ATM for me? He had two cards. They each had a $500 withdrawal limit. And so he gives me the two cards with the numbers, and he can't just go out on his own. There's going to be eyes all over him. All right, yeah, sure. Now, I don't tell my bosses I'm going to go run this favor. I'm expecting there's an ATM just around the tunnel in the private area. There's not. The only ATM I could find was in the most crowded part. If you've been to the United Center, gate 4 is the most crowded part of the concourse, and there's an ATM right there. So here I go in my sweatpants, not wanting my bosses to notice that I'm gone. I run up in the just normal queue in the stands. I get in line. I have to wait for 2 or 3 people in front of me. I've got a high profile player's cards in my pocket. I put them in. I dial everything, take out 500, take out 500. I shove $1,000 in my sweatpants pocket, and I run back down into the locker room, hoping I don't get noticed. I mean, certainly he would have gotten noticed if he did it. I hand him $1,000, and I think there's $100 tip on that. Anyways, that's one story of some of the shadow enterprise that happened with the ball boys.
Amazing trust to give
Right.
someone else not one, but 2 ATM cards and your PIN.
We were all young. There's not a big lesson out of that. It's just kind of a funny story, but it is remarkable with professional athletes.
Mike, I'm wondering, just being exposed to that and job stacking with your startup at the time, did any of what you were seeing with the players and their relationship with money inform how you were thinking about money for yourself and your own ambition as an entrepreneur?
There's one story that I love. It's just something I overheard in the locker room. We had a guy named Brian Scalabrine on the Bulls. He's a fan favorite that you would only know if you were in Chicago or Boston. So he won a championship with the Boston Celtics. He was a fan favorite with the Bulls. He's a big guy. They call him the White Mamba, red hair. My brother, Danny, was also a ball boy. He has red hair the same way they used to call him Little Scale. Scalabrine's in the locker room. Some conversation about money was actually happening. He's got not the biggest contract, but sizable. I remember him saying, I hold on to the milk jug, and my kids have to fill up the milk jug with water from the sink, and we put that in the fridge. And clearly he can afford bottles of Fiji water or whatever, but he's holding on to the milk jug. He's putting that in the fridge, and he's trying to instill that his kids are not growing up thinking money just falls from the arena. That was one thing that I remember hearing. While, by the way, there's Rolls Royces and Bentleys in the loading dock. I once accidentally crashed a golf cart into a Camaro, but he's holding on to the milk jug.
I was just curious if it caused you to think about money differently.
You realize there's a lot of money to be had.
As a young person, you shared you were motivated by money, and you have this job working with professional athletes who are making a lot of money. And then you have an opportunity with your startup to go on Shark Tank, where you're having a money conversation on recorded TV.
To me, being anywhere near the NBA, certainly behind the scenes, was the dream. Something that is almost like a paralysis can occur where you are so close to this dream arena. But as a ball boy, and I kind of joke in the book that quite literally we'd have 30-year-old ball boys, and I would have been one if I didn't get too busy. I was 25 by the time I stepped away. So I was an adult ball boy. But the reason you're holding on until you're 25, 30, 35 is you're so close to this like dream reality, but you never really have leverage trying to come up through the ranks, even if you're on like the business side. Now it does happen, but Mark Cuban's advice I've heard him give to sports management students is, hey, go into a different field and develop an expertise and a unique creativity that you can then bring back to the sports team. Because if you're just trying to come from bottom up, it's really hard to ever grow. So you don't have leverage. One thing I realized related to money, being behind the scenes of the NBA, was I'm never going to have unique leverage to get anywhere close to that guy's Rolls Royce by doing what I'm doing today. So it was only by doing something different that I ended up being invited to the front office of the Chicago Bulls for a business meeting with the top business operator, executive vice president, Steve Shanwald, only after Shark Tank occurred, which only happened because I was off doing something else. So that became my unique differentiator, was I was the ball boy working on a business, the ball boy on Shark Tank. I think that's one thing of figuring out what is your niche, what is your differentiation. And even if you're at a place that seems like where you always want to be, if you don't have leverage to really be something in that arena, I think you have to go somewhere else where you can grow and get better experience and skills.
Great lessons. Mike, I'm curious with this business you started, you sold it eventually. It was a bit of a roller coaster. Money plays such an important part of running a business. And then there's your hopes and dreams of where you're going to liquidate it and go off and sail off into the sunset or whatever your goals are. Tell us about that journey and what was happening with you internally as the emotions as you're riding this wave of needing money, selling the business, the cycles that were down.
Delayed gratification is the theme in building a company. The instant gratification is, I'll trade you labor, you pay me this cash. In building a startup, one theme that I would say was something I would find myself journaling about in the tough times, which then became the stuff I wrote a book on, was that there are other ways to cash out the experience before it's the money. So maybe cash out's not the right word.
Value out.
Yeah. No matter what I'm going through is going to be some experience, some skill, some perspective that is compounding, like compounding interest, that maybe it exits out into a cash deal someday, or maybe it exits out into, well, now I get a more unique job because I have this experience base because I tried to pitch 200 angel investors. And so I learned these things, or I made these relationships. And so what I found myself, this was a 12-year journey. The first 4 years hit a total brick wall. We had to pivot. Then it took 2 years to get to our first $1 million revenue year. So now we're 6 years in. Then when we finally get a venture capital firm to write us a term sheet, it's what's called a down round, a pretty major recapitalization. So that was a combination of bad news shareholder calls to 100 angel investors that were already on the cap table, which is atypical. And then it was also realizing, okay, we're going to have to re-earn our equity in a new management option pool. So you're 6 years in, and there's a lot of reasons I just step out and quit. We're certainly not millionaires. 6 years in, we're like starting over with less of the pie. But if I looked at it from the other things, okay, well, now my experience is going to continue with a structured board. Now we're going to have this amount of capital in the bank to deploy in our go-to-market levers. Now I'm going to learn what it's like to lead a company of 100 employees. So there's all these things that even if it never got to an exit, which happened then 5 years after that or 6 years, I still felt the compounding interest on that experience, network, and everything else was growing. So that, I think, is the mentality you have to have building a company, because you may never get the cash out.
How are you learning about these important money decisions as a young person going through this for the first time, not having had a lot of life experience at that time? Your life experience in a short period of time sounds amazing, by the way, but you're still relatively young.
Part of the reason I'm passionate about this space I'm in with Impruve, my next company, where we work with RIAs, work with financial advisors. I genuinely believe in what a financial advisor does. And it's not because I don't think AI can do many of the tactical things that a financial advisor does and is going to do in the future, but it's because the relationship trust and the behavioral coaching is needed, frankly, far before the liquidation event. And what I think the future can hold for financial advisors is to be able to scale the same way we were scaling college professors, those relationships, so that you can have touch and influence years before somebody has a liquidity event. Because what I lived through is I didn't have a financial advisor as we went through pretty major cap table decisions, debt decisions, financing decisions. You have your board, but the board, you certainly hope everybody has all the same shared interests, but there's always some degree of conflicting interest because one might have certain rights on the cap table, certain equity ownership, certain marks to hit with their LPs. And so there's not always the same interest between the investors and the founders. There's somewhat of a taboo when a founder is bringing up the exit horizon. Now, I have a great mentor, Mark Ackler, wrote a book called Exit Right, where they talk about you should have an exit conversation every year. However, we weren't doing that. So then we're still in the trenches of this. I get married, you have your first kid, and you still haven't really brought some of these long-term decisions and how decisions today are factoring into that future scenario. You haven't brought those to the table because as the founder, it's like taboo to talk about when the exit happens. Taboo, frankly, to talk about a down round on a podcast like this. That's why I love the spirit of Money Tales. You bring these conversations to the fold early, but if you don't have some kind of coach in your corner when you're 25 building this company, you can make some pretty pivotally wrong decisions that'll impact you when you're 35 with kids.
It's really important. And you talked about your wife during this time you're getting married. Tell us about those money conversations you were having as your business is going through the different types of financial potential outcomes.
Morgan works in tech as well. She's done a lot of coaching, enablement, revenue strategy type roles. So fortunately, we're kind of in a similar world. We met in college. Neither of us were in this world. Morgan was thinking about going down the medical route. Both of us had nothing going on. I didn't have any traction on the startup. And as we got further into this ride, that was the first startup, as I raised angel capital, it was equity financing, but I thought of it as debt. I felt like they took a chance on me and my co-founders, and I didn't want to let them down. There was a phrase that I think still is popular, bet the jockey versus bet the horse. The horse is the idea, the business model. The jockey is we're betting on the entrepreneur and they'll figure it out. And all of our early angel checks were mainly bet the jockey. We're betting on you, believe in you, kid. Not that they were saying, you better not lose this money. They all knew it was a high risk investment. But from the founder and being 22 and looking at role models that then have bet on us, I viewed it like debt. So I can remember Morgan and I having a conversation at one point. We were both young, 24 maybe. And I'm thinking, I'm like $2 million in debt. And I just kept referring to it as debt.
That must have freaked her out.
I didn't realize this until months later. She thought, because I referred to it as it, that I was $2 million in debt. And she stuck with me.
Oh,
God love her.
It wasn't actually debt. The feeling was, okay, these are going to be long weeks and long days. And like trying to figure out, once that business had capital raised, the business traction wasn't there. How do we climb out from this? And frankly, to just call it a loss and walk away wouldn't have been the end of the world. But I thought it would have been the end of the world. And so that was the pressure we put ourselves under.
so you had that exit and then you needed to do something different. So you started another business.
Yes.
You don't want to be bored. I can tell.
I'm curious, starting the second business, this newer one, how have you marked how much you've learned about talking about money? How's that different this time around?
You now have a lot of understanding of everything from tactically how different stock types are treated from a tax basis, capital gains versus something called qualified small business stock. So there's all of that. At a more fundamental level, at the core of building a company, and I think of building a good lifestyle, sustaining a household, it's this LTV to CAC thing, lifetime value versus customer acquisition cost. In the first startup, we went and raised capital, and then we thought, capital to then put together this operation that would bang down this brick wall of getting textbook publishers to give us licensing rights to their books. Long story short, we kind of did need some upfront capital, but also for 4 years, we kept raising more and trying to bang on this brick wall. Versus second time around, realizing building a company is a discovery process rather than go raise a bunch of money and start burning it. Do a genuine discovery process and just start talking to the ideal customer type, start building product. Now it helps. I'm partnered with my brother, Danny, who's a software engineer. It's also gotten more cost effective to build software with the state of AI enhanced coding. A lot of things are a little bit easier that way, but at the core, it's, hey, look, we're not going to pour dollars into hopeful marketing levers until you really know at a deep level what the hero's pain points are, the customer's pain points are. And you've got replicable cases of now we have this thing that we know we can repeat across the next 100 and 1,000 customers, and the limitation on building either the next necessary features or getting to that market at positive economics is cash. Until that's the case, you're not out there raising cash. At least none of my second-time founders are. That's probably the biggest thing from a personal standpoint, then understanding what the length of the journey could be, then building our household economics on not expecting some substantial new stream of income from the new startup until sometime later. So again, the delayed gratification point.
You seem like someone who has a lot of ideas to share. And I'm curious, what are your top 3 things you would tell a first-time entrepreneur about when they're building their business specific to money?
Keep another job. This asset that you are hoping to build is unlikely to be a cash producing asset for some period of time. The signals that you can start to hear in the market from getting some basic version of it out into people's hands. Even if that's just conceptually a PowerPoint presentation or a deck that you then are getting feedback on a Google form, which was the first thing we did with Impruve. Those signals, surrounding yourself then with a good network of advisors or friends, you can start to go through your discovery process at 20 hours a week while you still work the 40-hour-a-week job. Or eventually then you move to part-time on a job. But you want to keep the income so long as you can, because that then allows you to go through a true discovery process with the business. If you raise capital, if you can get it, to then pay yourself a salary, that is now this leaky boat that you're trying to build and captain the ship at the same time. And you're giving yourself all these money pressures, especially if you have family or whatnot, totally unnecessarily. And so what I would say is you can find the signal at lean cost, keep the other job. If you're graduating college, or even if you're in high school, think about what college to go to. Well, think about what kind of debt. If you go to a state school versus a private school, it doesn't really matter if you went to this elite private school if you're trying to build a company. I always kind of advise, try the community college, state school, and be as lean and nimble as you can on cost. Your cost model drives almost every aspect of your flexibility and decisions that you're going to have.
Great advice, Mike.
What's your next money conversation going to be, and who's it going to be with?
So I've had a lot of money conversations with both my wife, Morgan, and my co-founder, Danny, who's also my brother, because we've fortunately been able to self-fund our early days in Impruve off of proceeds from the last company, Packback. That was meaningful skin in the game. It's not like we made $1 billion on the last company. And so the core of money conversations have to do with how much capital are we able to put into the new venture? Then how are we building it? How are we designing the cap table between Danny, my partner, and I off of that? I'm still kind of in my startup mode answering that question. But then with my financial advisor, everything's kids oriented. I've got a 4-year-old and a 2-year-old, both boys, the 529 plans. What are we going to do on school, continued EDU? Those tend to be the money conversations.
So good, Mike. Where's the best place for our listeners to find you?
LinkedIn is great. I'm Mike Shannon. MikeShannon.co is the landing page for the book, which is Sweaty Equity, a ball boy, a billionaire, and the bonkers startup tale you've never heard. Mark Cuban called it a wildly entertaining story. So that's the landing page there. LinkedIn is probably what I'm most active on, but Mike Shannon at really any social platform.
It has been an absolute pleasure talking with you, hearing your stories, and thanks for getting vulnerable with us.
This was fun. I appreciate you two having me on and giving me the platform to talk about it.
Thanks for listening to the Money Tales podcast. If you've enjoyed this episode, share it with someone you think would benefit from listening. And leave us a review on your favorite podcasting platform. Your ratings and reviews help more people find our podcast. If you're inspired to gain clarity and peace of mind about financial matters, don't hesitate to reach out to our team at Aspirient. Go to aspirient.com/start a dialogue. Or you can email Sandy and me at podcasts@aspirient.com. See you next time.